We'll bring in Chris. There he is. Well, there's
All
Chandler.
right.
Hey, Chandler.
Sorry, I was coming in to save the day again, but
I don't know what's going on. My computer is just having a hard time. I'll say hey to Chris and I'll give him the stream. So we can just bring in. Hey, Chris, how's it going, man?
Morning, Nick. How are you, man?
I'm good. I'm good. Hey, I was over on your side of things the past few days. I was in Colorado and
Okay.
went to Breckenridge, did some snowboarding, skiing, and with the wife and some of our friends. So had a good time. But it is cold over there. I don't know how you guys do that.
Well, I prefer not to. I'd rather
Yeah.
be going south. I broke my arm a couple weeks ago, so my golf game is on the break right now, on the pause.
Mm.
But I'd rather be going to Arizona, get a little reverse snowbird action. But how was the snow, by the way? How was it in Colorado? It's been like mixed. It's not the same winter here that was last year, but everything's open and cranking. We get 4 to 6 inches just dumped on us in once a week. No big deal.
Yeah, we actually got lucky while we were there. When we first arrived, they were like, "Yeah, it looks like the season's going to kind of end a little bit early." But then there was like a big snow while we were there, so it was awesome. Kind of
Yeah.
was a surprise to the weather, and that made snowboarding a lot more forgiving for when I fell down. So it
Sure.
was,
Are you still learning, or are you a pro?
not a pro. I can do blues. It's
Okay.
not pretty, but I can do blues. So I'm
All right.
I'm a pretty beginner, but
Nice.
still fun. But
Nice,
anyways,
nice.
Chris, my computer is having issues this morning. I don't know what's going on. It keeps freezing up on me, so I don't want to freeze up on you. So I'm just going to hand over the stream to you. Before you take over, let me just say to those guys who are listening, of course, I think Chris is going to be streaming to some of his platforms, some of our platforms all at the same time. Let me just say, if you guys do not already have Chris's YouTube on your subscription list, make sure to go find him on YouTube. He's got a Discord channel, I'm sure he'll mention here in just a bit, all of that stuff. So give your attention to Chris. You guys are in good hands. And Chris, have a good show, man.
All right. Thanks, Nick. Good to see you.
All right. See ya.
Cool. All right, everybody. So I just wrapped up a little 9 a.m. session and tuned in with Ivan Frank and Nick just a bit ago. So I wanted to just kind of recap what I'm talking about. I was looking at the Edge Finder as well. I see that that's a big plus to be looking at the Edge Finder Pro and taking a look at the percent changes. So the pound this week, the Kiwi, I did actually just take some profit on the New Zealand Swiss. I put a trade in on Friday. Fortunately, that went my way. I was in a trading battle last week with Blake Morrow, hosted by Boris Schlossberg. 8Cap's a big part of that. Those are a lot of fun. I know Nick and the team has been in those as well. And this year is going to be really exciting for the trading battle. So I'm trying to just scrape out a couple more bucks for charity, and I'm looking to see what my positions will do. I'm currently in a dollar short position and a dollar Swiss long position. A couple ways I'm looking at this. So my balance is 10,641. I'm still in a bit of a drawdown, seeing if the dollar can get stronger this week. Two things that I want to watch. I'm going to keep my analysis really simple this week. The big thing that I'm paying attention to is this name right here, NVIDIA. I mentioned this in my live stream this morning. Crazy stuff that I consumed over the weekend, content wise. NVIDIA has surpassed Amazon and Google in market cap. NVIDIA is also larger market cap than the entire US energy sector. It's insane. The hype is real. The AI fueled momentum rally is ridiculous. If anybody was following me last week, we talked about SMCI. That is, I think it's literally like supercomputer is the name of the company. But we talked about this in my trading room. I've got some credit spreads in at 600, and I know today's President's Day, so equities is closed. But there's still a lot of downside for me to be in threat on the trade. But this was insane. This is literally called Super Microcomputer. I mean, it just sounds like a fake name, but this stock was up 280% year to date, one of the best performing stocks of the year. And Friday alone, just a massive dump. I thought this was interesting. I showed this. Look at this. Look at this relative strength index right here. So the RSI. I show the subgraphs. I have never seen a stock. Let me go to the daily time frame. I've never seen a stock do this on a relative strength index. This is the daily time frame. I think this value was like 90, 96, 95. Let me see if I can get an exact pinpoint. It's like one of the highest RSI readings I've ever seen. Anyway, it obviously cooperated at some point with a crazy sell-off on Friday. And I say all that because we come into this week's earnings and we have NVIDIA along with pretty much every other index way overbought with divergence. So what I do expect this week with the stock market, what I expect with the ETFs, the SPY, the Qs, the DIA, the IWM, they're going to be impacted by what Nvidia's earnings give us. It's now one of the largest companies, in the world. It's top 3, top 4. Just like we saw with the Mag 7 earnings, the market's going to move. CPI data last week, we had a $13 week in the SPY. It went absolutely nowhere, but it was still a $13 week from top to bottom. So coming into this week, look at the technicals. We're overbought on the relative strength. We showed divergence here on the momentum oscillator. We're sitting here with some indecision the last few days. If I zoom in on the actual chart, we have a lot of demand to the downside. We've got some pivots we could be missing. Here's what I look at. I don't know what Nvidia's earnings are going to be. They're probably going to be great. They might be terrible. I have no idea. I really don't care. What I'm interested in, how can I position for it? Okay. So if I went into Nvidia, and this isn't going to be a live feed because equities are closed today, but if I went into Nvidia, and first I have to type in the symbol correctly. So if I go into Nvidia, look at positions, see if this pops up. So this is Nvidia. We're trading at 726, 727.17 was a close. I will know more about this with live session tomorrow when I'm in my trading room. But we have earnings on aftermarket on Wednesday. So as far as the expiration goes, I could be pretty inexpensive if I want to go out to Friday. I'm going to take a look, and actually, if you're interested in do this with me, let me go to, it's right here, optionsslam.com, and let me log in. There we go. Okay. So this is a platform that I use when it comes to options trading, options pricing. I'm going to type in Nvidia right here, and I want to see what the averages are. So I can guess or guesstimate, educated guess, how this would price out. It's probably going to be an expensive play. If you want to do a straddle, it's going to be expensive. Even a debit spread situation might be expensive, but I'll price it out during a live session tomorrow. So we have earnings on the 21st. It's going to be aftermarket on Wednesday. I take a look at earnings history. And what we're going to notice here, percentage wise, you can still see that we haven't had all solid earnings for NVIDIA. So we had a slight miss here in November 2023. Then we had August, May, February, all positive. November back to February 2022 when everything was down and you couldn't hide. Everything's crappy. Bonds are down, stocks are down, forex is risk off trading. It was we have mixes. But what I think is interesting is looking at the averages. So as Nvidia has gotten bigger and bigger and bigger, take a look at the average move in earnings, right? So you're getting double digit earnings. The expectation here is about a 13.89% print. Now, go back into 2021 when Nvidia wasn't really on anyone's radar. I mean, it was in a way, but it's just been this crazy outperformer really over the last 12 to 24 months. I would say if I want to be conservative, I could calculate about a 10% move on Nvidia this week. We're trading at, let me go, I think it's 770. We're trading at 726. So if we did 726 at about 10%, the average is 13.89. So if that's my percent move, 0.1389 times 726, I would expect a $100 move in earnings this week. So up or down, we're trading at 726. We're going to see $100 of movement somewhere from high to low. Now, that's what's expected. The market might blow this out one way or the other. It might be a super drag. It might be a gap higher than it fills the gap. I think if we looked at something out to Friday, that's really tight because it's aftermarket Wednesday. Thursday, this means that you're trading Thursday, you're trading Friday, and then your expiration is done. You got to be right by Friday if you're going out to the 23rd. I would consider possibly getting myself a trade on NVIDIA out to the 1st of March and giving me another week of time to let this trade play out, let the indexes kind of digest the information, good or bad, let the overall volume give us some levels. I'm curious to see if I go out to open interest, look at some of these big, levels on the ETFs, the SPY. We can look at ETF or open interest levels on NVIDIA as well for the 23rd or the first expirations. So let's have a look at that. So I'm going to say conservatively, $100 is my average earnings with 13.89%. If I did the 10%, which is obviously stepping down a little bit at 726, we're looking at a $72 move. So I would just say this: if we have average to expected earnings we're looking at a 72 to $100 move in NVIDIA. All right. If I go to the weekly, here's a weekly, and here is my ATR at the bottom. That's an average true range. We're looking at a 39.47 ATR. Now, that is crazy small compared to what the expected earnings are going to be. So the weekly ATR is 39.47. Obviously, that's essentially saying we need earnings to double the average trading range or the average true range, right? And that's what earnings are capable of. They obviously spark a lot of volatility. That's what we would expect to see is a lot of excitement, a lot of volatility, good or bad. Now, what I care about is how can I price out my option trade? How can I price out, a trade in NVIDIA that doesn't cost me too much to buy premium if I'm long on the option, or I can possibly collect a ton of premium on a sell option, but with so much volatility, I need to make sure that I need that sell option to finish out of the money. That's my plan. So let's take a look at it. All right. So go back to this software here, and this is just a website. I pay for this. I subscribe to this. It's like $200 a year. But when I trade options, this is really helpful, especially on earnings season. See what the market's capable of. We do this a lot in my Equity Design Man trading room. If it works out, we price a lot of this stuff where, we find options where it's like it's priced okay. Let's take a trade on it. It's too expensive. We won't take a trade on it. So it's a nice filter to figure out what we can and can't trade when it comes to an earnings print. So that's the average. Now, what I'm curious of is post earnings. I always like to look at post earnings. And here we go. So remember, 10 to 13% window. Okay. So when you look here for these last prints, you go post earnings open. And what I'm going to see is how many of these gave us at least a 10 to 13% move. Because if that's the case, that means I can price out my options for that $70 to $100 move. And if it goes beyond that, it's easy. If we've got NVIDIA that goes $125 or $150 from high to low, easy. That's an easy options trade with a ton of profit potential. All right. If I do a sell option, I need to make sure that I have very wide levels so I can see if those options will finish out of the money, or I just put it on after the fact. But anyway, how many of these trades get me to 10 to 13%? Okay. So we start out here at 0.18, we get to 2, 4, 4, 3, 8. 13 days later, we get to 8%. That one doesn't get to my 10 to 13%. So that one doesn't count. 6 reverses to 2, that's an 8% swing. Back to 4, that's a 6% swing. To 3, that one doesn't count. 26%, obviously that does it. Right out of the gates, huge blowout move. 12.94 gets us right there, pushes to 14. That gets us that 3.89. That's above 10. So that one checks the box. 1.22, it doesn't get us to 10. That one doesn't move. 2 to 4, that's a 6% swing. Then a swing back to 6 negative. That's a lot of volatility. We go 6%, then almost, what is that, 12% swing, and then pushes to 1980. I mean, that one does, right? So just 4 positive to negative 5.5. That's a 9 to 10% swing. We still push to 8%, which is a 4.8. That's a 12% swing. We get all the way to negative 19. So that's a ton of volatility. That was August of 2022, which makes sense in the timeline. 2022 was terrible for pretty much everything, tech especially. So that one checks the box. We get 5.53 that pushes to 10.82 to 15 8 days later. That one checks the box. 3 to 7 to 10 to 10 to 10, 11. We get in there that 8 to 13 days. That one checks the box. 10 to 12. That one checks the box. And 2 to 9 to 15. That one checks the box. So in the averages, 10 to 13%, I have 1, 2, 3, 4, 5, 6, 7 out of 10 occurrences where NVIDIA has pushed at least 10+%. So that means that volatility wise and expectation wise, over the last 10 earnings, we've at least had 7 out of 10 prints that have been in that 10 to 13% window, which means I can expect to price out my options accordingly, which gives me the confidence that we should have at least a $70 move, $100 move, and I can price my earnings or my options on that. So, if you're interested in how we trade it, I've got a little $27 link if you want to join me. If you're in my Discord channel, I'll post this in the chat right here. Let me go into my Discord for my free group chat. Post the link right here. I'll do this so it doesn't expire. Is that a Progressive commercial where you have the ant problem? Expire. Thanks, Nick. All right, so I'll do the new link. So here's my Discord. So Chris Pulver Trading. That's my Discord. There you go. So that's my link. And so if you want to check that out, so in my link, I have a bunch of stuff. I've got education with trading rooms, and there's trials for $27. I've got links to the A1 Edge Finder and some other software they use in the affiliate links. I do private instruction as well. I know that Nick said that for Ivan. I do a lot of private instruction one-on-ones. I did a few this weekend. And I'm actually going to post a top weekly pick. So anyway, check it out. But if you want to look at the trading room stuff, equities on demand, we'll be busy in that this week. And I will probably price it out tomorrow morning once we have a live session. And I'm really interested. I mean, if I can make a few bucks on Nvidia, great. I think more importantly is Nvidia is going to be enough to move the entire market. So what does it do? Earnings good or bad? I mean, we're trading at 726. So, to the 70, let's say the 72 to $100 move, that puts us somewhere between. So let's say that we have, the 10% move, right? So we're looking at that 10% probable move. And then we have the 13.89, 13% 89. This is the earnings average, right? So that puts us around $100 and change. And then we have the $72 move right here. So 72.60. All right. So if we open up tomorrow morning at 726, let's see what the high and lows could be. Well, we'll give ourselves a little bit of a bracket. So if we go 726 plus 72, that puts us around 798. Okay. To 826 on the high side, right? And if this is too much Nvidia for anybody, let me know. But I'm telling you, this will be a catalyst this week that will move the entire market. So, just like you use the A1 Edge Finder, we're trying to find trades. Nvidia is going to impact the SPY, the Qs, the entire market, the broad market, good or bad. We've had a nice little seasonal drift and melt up this year to hit new highs, overbought conditions and divergence across the board. The SPY, the Qs, the DIA. I looked at the DAX this morning. Everything looks about the same. We've stretched into overbought conditions. Technically, we're due for its corrections. CPI last week was a bit of a head fake. We haven't really taken out the CPI candle. All right. Dollar index still to me looks postured to the upside. If we have risk off trading, that would make some sense for the dollar to get stronger. Anyway, so there's my 798 to 826 on the upside. And on the downside, let's go to 726 minus 72. Actually be plus, minus 72. 72 would be 654 to 624. So 654 to 624. Okay. And why is this important? Because all I'm going to do is draw a couple of boxes on my chart, right? So this is where Nvidia is at. And I'll talk about this trade. So here, there's a couple ways you could play this. You can be a long option trader. You can be a short option trader. But I'll tell you how we can kind of position for that. And this is what I'm going to look at in my trading room tomorrow. So let me draw a couple of boxes here. Hopefully I can squeeze this chart and get this to be where I need it to be. So let me draw a box, 798. So that's right around 800. So we got 798 right in here to 826. Okay. And then copy and paste that. Come down here to 654 to 624, 628. See how that works? Okay. So this is where I'm looking for price to go. And we can have a blowout move where it's way above or way below. I would assume right now the markets wants to do anything to just kind of push it higher. But there could be some heavy profit taking, tons of volatility. And I just think that the whole world's going to be watching, especially if you're interested in trading the stock market. This is going to be, the earnings play heard around the world. So here's a couple things I can look at. If I wanted to be long the option, okay. And again, give me some feedback here. When you're watching, is this interesting? If you want me to switch gears and go into more A1 trading edge finder stuff, that's fine. I can find some trades there. But I'm telling you, like, I'm positioning my week around this. This gives me access to what I think the SPY can do, what I think the Qs can do. So for me, this makes a big deal, or this is a big deal. All right. All right. So 800 to 826 in the upside, 650 to 625 on the downside. If I wanted to be an option buyer, if I want to be long the option, here's what I'm going to look at on Nvidia. So this Friday, I think, is too tight of a window. I think if you go to Friday, we go to that option slam soft or the website here, it might take 8 to 13 days to get that 10+% move, right? Maybe not, maybe it's just blow out right away. But if it takes time, if I give myself 8 days, we have earnings aftermarket Wednesday, 1, 2, 3, 4, 5, 6, 7. If I go out to the first, that gives me 7 trading days to be, in my expiration window. So if I wanted to incorporate the 8+ days, 13+ days, I would have to go out to the 8th. Now that's going to be expensive if I'm long the option. That's going to be volatile if I'm short the option. So the expected move could be really, really large. I still think if we go out to the first, we might pay a little bit more, but we're going to have plenty of volatility, especially blowout move on Wednesday, good or bad, or maybe it goes nowhere, right? That's worst case scenario. So anyway, I'm going to look long the option. Let's say that we go out to the first. So here's March 1st. Now, what you can see on the software here, if you see the shaded red, this is what the market is expecting. So we have an IVX of 80.8, which is the expected move around 84. Did I not calculate that? I did. That roughly 10% move, there's your $772. 84% is expected here with the implied volatility, which gives us an upside of around 810 to a downside of around 640. Okay, 810 to 640. That's right in that wheelhouse of what we had on the charts. Top side, downside. So if you wanted to look at being long the option, here's where price is roughly going to open between 725 and 730. I could do this. We're trading at 726. If I bought a call, okay, I'm going to buy this call. So let me switch that. So if I buy the 730 and let's say I buy the 720, this would be a long strangle. Okay, that's the silly word for when you put somebody in a chokehold. Just kidding. That's violence. But no, you do two different strikes. So I do the 730 long call and I do the 720 long put. Price is trading right in between. The reason I would consider going one strike out saves me a little bit of money. If I do the 725 on both, you're going to see that I'm going to pay another $6 a premium here. By the way, this is a very expensive trade, right? So here's what's interesting. Let's just talk about buying the options right now. If I bought a 730 call and I bought a 720 put, if you understand this stuff, you need price to move directionally. And because you're paying, this is what's nuts. Watch this. You buy the 730, you need price to go $89.30 in order for that trade to make money because I'm trading both directions. All right. If I did 720 and it goes down, I need it to go down $83.90. That's a lot. So you are paying a ton of premium for this trade. Now, if you think, well, that's crazy, why would you just do both sides? I mean, maybe it should just be bullish. Well, yeah, then you can save money on that. So just go bullish, right? You buy a 730, you have to pay $43, which again, for contract size, if it was one contract, that's a $4,300 option. But if it's a $4,300 option and the stock moves $80+ to the upside, that $43 you paid, let's just do some simple math here. The $43 you paid, let's just keep the number simple. Let's say Nvidia goes up $100. So we have 726 and it goes up to 826. That's a $100 move on the option and we paid 43.45 for it. So I can take a $43 investment, which is $4,300 max risk for one contract. I could generate 56.55. If I take away the 43.45, I net $13.01. Okay, that's what I net. Now, divided by what I paid for it, that's a pretty good return, kinda, 30%, right? Actually, I did that back. Sorry, I did that backwards. We have the move go $100. We paid 43.45. I totally did that wrong. 43.45. We make 56.55 divided by what we paid for it. Yeah, we can make over 100%, 130%. That's a great investment. Okay. However, if it doesn't go more than 40 some dollars to the upside, if it goes to the downside and you pick a single direction, you're wrong. And this trade will almost immediately be worthless. So a $4,000 risk to be bullish could cost you dearly within, a day, which is why I'm not necessarily looking to go one direction. Okay. So this is what I would consider. If I want to be long option, I would do a 730 long or I do a 720 long, and then I would sell something on top of that. So if I did a 730 long and then I cap this, so 720 to 710. Ugh. This is also a terrible position. I would have to pay $9.48 to make 10, which gives me a 50% or 50-cent profit. That's terrible. Could I go out to a 750, get myself $20 of upside, get myself $20 of upside here? Now I get $20. Trade's going to cost me $17.90. I could walk away with $20 max profit. That gives me $2.10. Also not great. Terrible, terrible. All right, I'm going to clear this. I'm going to go one more trade. Okay. The world says I like to trade in stocks, but don't know how I can track them. I mean, good old paper and pen helps. I do a lot of tracking right here on a little notebook. I keep spreadsheets. I keep a trading journal. That's especially if you're trading stocks, you're trading options. I've got a spreadsheet that helps you calculate the cost basis and the break even. Super important. If I buy a share of something, if I buy 100 shares of something, and I'm trading options, you're working around the portfolio. So if I own, let's just say shares of Nvidia. If I own 100 shares of Nvidia, that'd be awesome. Especially the last 5, 10, 15 years. But if I want to lower my cost basis, I sell covered calls, I do credit spreads. Any profits that I generate from those option trades, I can lower my cost basis. There are stocks right now, for example, like JetBlue. JetBlue, I own this in my portfolio. Thought it was interesting over the weekend that Carl Icahn he's an activist investor. He took a 9.91% stake in JetBlue. Technically speaking, we're sitting at these 20, 30-year lows. We've gone back to 2020, 2008, 2009 lows. If we get into a bullish situation here, right? If we get into a bullish situation where we have JetBlue looking to head higher, cool. I own the stock at $7. I trade options around it. Just what I have going on in my portfolio right now. I had a long call that I generated about 95 cents for. So here's what's kind of nice. If I own 100 shares, so JetBlue, let's say I own at $8 per share. Okay, and let's say that I own 100 shares. So I had a long call that I collected. I had a net profit of about 95 cents profit. So right there, because my long call was the same trade size, so one long call is the same as 100 shares, I made 95 cents profit. That lowered my cost basis to now $7.05 on JetBlue. Right? I also have credit spreads. We have a 550 by $5. We have a 6 by 5. And let's say that with those credit spreads, I'm going to generate another $1 of profit. What does that do to my cost basis? By generating another $1 profit, same contract size, that brings my cost basis down to 605 on JetBlue. So I just went from buying shares at $8, trading some options. Now I own the shares at 605. That just gives me more upside. This is the beautiful thing about options. And this is where you got to keep track of it, manually. So if I own the shares at 8 and I do nothing but hold it, I'm still upside down by $1.04 because the stock's trading at 696. But because I've used options to lower my cost basis, okay, right now I'm actually in profit. I'm in profit by about 90 cents. If the stock price goes up to this level here, which is around $9, or goes up here to where I have these chart alarms, let's just say it gets to $10, right? If the stock price gets to $10, look at how I have increased my profit potential from just owning at 8 and getting rid of the stock at 10, making $2 a share, versus lowering my cost basis to 605. That's a huge increase, right? 605 to 10. Now I make $3.95 per share as opposed to 2 by buying and holding. Beautiful thing about trading options, right? So anyway, but yeah, don't be afraid to break out just a notepad, keep a little spreadsheet, I use Word docs and spreadsheets. It's not that hard. It is time consuming. Like when I go through my portfolio, it's a lot of spot checking A to Z. Have I done anything with this trade? Keeping track of options, a lot of stuff like that. Okay. So I know I spent a lot of time talking NVIDIA. I think that's going to be a big mover this week. I know we have some interest in the dollar index. I think this is what we're going to want to watch for some currency trades this week, risk on, risk off. I still think that the dollar is postured higher. If we have risk off trading for whatever reason, the dollar should gain. I think there's upside here to this 105.50 support becoming resistance. I can see the dollar drifting up into this area right here. So dollar strength, as long as we stay above this yellow box. This was a 2 to 3 week breakout. This was going into FOMC. Dollar got stronger. CPI data last week. The market fought back. But I'm curious to see if we posture this move or we break, we pull back, and we go again. 105.50, target one. Dollar strength has room to continue all the way up here towards 107 and change. From that point, I would be more interested in shorting the dollar. Maybe the timing of that is if we kick off this pre-summer move, let's watch it, right? I mean, a lot of times March, April, May, the market gives us some pretty good trends. Those trends might even drift with enough momentum to take us into June and July. So we have like these summer drifty trends, low volatility, but the same direction. Dollar could be one of those trades. Dollar could be a really good trend trade this first part of the year into the pre-summer push. If I'm wrong and the dollar pulls back in this yellow box, then I'm not long the dollar. But right now, the posture looks pretty good to be long the dollar. Does that correlate into risk-off trading for the markets? We will see. SPY is going to move this week. Last week was a very volatile candle. Watch the high, watch the CPI low. If it goes nowhere, but we have volatility, there's your trade in the SPY this week. It goes nowhere, but it's going to be extremely volatile. If we go higher or lower, that's a lot to ask that the market's going to move, $13, $14 when the average is around 10. If I go to the weekly ATR, you're going to see about a $10 expected move on the SPY. So 1088 is the expected move on the SPY. You go to the DIA, it's probably around $7 or $8. A big wick, wick high, wick low from last week's trading. 720 is the weekly expected move on the DIA. The Q should be around 12 and change, 1270. So are we going to actually break higher, break lower with a move that matches? Is it going to be indecisive this week? I don't know, but I'm going to try to position for it. Okay. So busy week ahead. Lots of volatility with NVIDIA. Indexes should be moving. Dollar index will be moving. Bitcoin, exciting stuff. We're trading at 52 and change. This blowout above the $50,000 mark took out the 48K highs. I look at it this way. I talked about it this morning in my first session. It is possible that we have a pullback. And if we do, I'd like to see it, right? A pullback like this and possibly a broadening pattern. If that is the case, let's say that we stall at these highs and we start to push down into the midpoint, something like that. $43,000, I'd like to buy. If we revisit 40K, definitely looking to buy some more Bitcoin. I have kind of diversified my Bitcoin exposure. Now I have some stocks and options exposure around it. I own GBTC. I own BITO. I'm trading a miner called MARA. That's allowed me to take some of my stocks and options money, put that into Bitcoin exposure, so it generates some returns that way. So it's not just Coinbase, it's not just Ledger and other stuff I'm doing kind of off the grid. But this is a little bit more of the I would say the more traditional way, which is probably making it easier. And also, we've seen major inflows into these ETFs. Those 11 ETFs that were approved are starting to see some major inflows. And a lot of them, if you follow the big ones, it's BlackRock and it's Fidelity. Those are the big ones. So I think that's IBIT and something else. I don't know. But if you want to follow the BlackRock and Fidelity ETFs, I mean, I hate to support them because they're just $1 trillion asset holders, but they're probably the safe ones for all the money they have under management. They're getting some people exposed to a Bitcoin for probably anywhere between 1% and 5%. So you're getting some pretty good inflows, and that's helping the spot exchange, which is helping in turn everything correlated. Coinbase has had a crazy rip from 115 all the way up towards 192. I still like Coinbase as far as collecting premiums, cash secured puts. I mean, I wouldn't mind owning, but it's like I don't want to own it. Honestly, I don't want to own Coinbase. I'd rather just generate income and thinking there's an uptrend. We're going to continue to head higher. One stock that I really missed the boat on. I made some money on MicroStrategy, but this is not Microsoft. That's MSTR is what I wanted. This has a lot to do with a lot of correlation of Bitcoin. This is Michael Saylor, crazy Bitcoin maximalist. I think I don't know. Their Bitcoin holdings are worth like. I hope I'm not exaggerating this, but I think their Bitcoin holdings are worth like 500 or 600 billion dollars. I'm gonna fact check that really quickly. Let me go Google MicroStrategy Bitcoin holdings. Let's see what they have. February 7th, the firm has 850 Bitcoin. Okay, let's just do the math on that, shall we? 850 Bitcoin at $52,000. You're looking at 44 million. That can't be right. Oh yeah, okay. They bought eight. Okay, so 190,000. Yeah, I was like, he's way off. 190,000 times 52,000. Yeah, we're up at $10 billion. I was way off. Okay. $10 billion in Bitcoin. That's crazy. And maybe that's right, maybe that's wrong. But it says as of February 7th. So who knows? Point is, MicroStrategy looks a lot like a Bitcoin chart. I think what's crazy is I was buying this thing at double bottoms at 150. That's what kind of makes me mad. It's like, oh, that's a 340% gain. But at the same time, I got that type of appreciation with my Bitcoin holdings, so it's not a big deal. But crazy stuff out there. How about this? I've got another, 10 or 15 minutes. I'm happy to open up to questions. Any symbols, anything you'd like to talk about, anything on the Edge Finder you'd like to take a look at. What's caught my eye this week. I'm looking for. I'm certainly interested in put call ratios. Where's the big money going to flow this week? In fact, I've got some software as well. This is in my Discord channel. It's called Dynamic Trend. That is also looking at the big expirations, the put call volume ratio, where the big money's trading this week. Good stuff on the CPI data. I mean, things are trending lower. I really think it would be a surprise to me if other central banks hold on to these pauses as long as the US is. I think the US is good to pause probably until May, probably until June. I would not be surprised to see these other central banks flinch and have the ECB cut, possibly the Bank of England cut, maybe Bank of England, but their inflation is pretty high. BOJ, I think the whole world wants to see a shift in the unwinding of the carry trade, but we just got started. The carry trade just began in 2023. I think the Bank of Japan is going to continue to say nothing and do nothing, and the JPY basket gets weaker once again to the point where it's painful, and then all of a sudden they intervene, and we'll have this crazy unwind maybe in 2025. Which I say that because we're going to have a new election in the U.S. We're going to have a new administration. We're going to have this short-term struggle for who's right, who's wrong. Let's see what we can appeal and repeal and do away with, and the 2 and 4 year cycles U.S. politics is awful for long term. So that's why we operate in quarterly installments in the stock market where it's like, did you make money this quarter? Awesome. You didn't make money this quarter. You suck. That's pretty much what the U.S. does. But never a dull moment, right? So anyway, oil. Take a look at pound yen. Yep. Thanks for typing the questions. Perfect. Let's take a look. So oil. I am bullish on oil. We've had a nice little channel running. I think that right now buying oil is it's a small upside, but I think getting in, keeping the tight stop loss. There's room to kind of break the structure. I don't think that this channel that I have drawn is going to continue to hold. I think this channel is going to end up giving way to the bullish upside, where we have there's your chance to buy. You had a couple of touches of the channel, but we get to the upside here. I could see this being a bull flag, and something gets a little bit more exciting on the upside. Thoughts, right? So I could buy, have a little exposure here, tighter stop loss if it works. Putting stop losses in at break even or better. See if the upside really takes to $90+. If we just want to follow the channel, then you're not doing anything right now. You're trying to stay patient and look to see if we score a point for those bulls, come back and find a pullback point, find that channel support, look for a fake out or dip in here, and then get long again with stop losses below that turn. So if you want to be patient, wait for a dip. If you like long, I think the posture is looking pretty good. We have this really good support, really good resistance. My profit target on oil will be $90+. So I'm bullish on oil overall. Gold and silver, I think gold it's going to be very independent on the dollar, or very dependent on the dollar. So if the dollar gets stronger, I could see this. We pulled back into the CPI candle last week. As long as gold doesn't take out that CPI candle, I'm still bearish on gold for right now in the short term. Longer term, we break above 21. I'm long gold all day. But for the dollar index to be postured bullish, I think if that provides the direction I'm looking for, then I think gold's going to be a sell-off maybe over the next couple of weeks. Do I trade gold? Yes, I trade GLD. I typically just trade gold with options, so I could position for that. So I like GLD. That's an easy one to spot trade. Plus, it's really highly correlated to XAU USD. But I do trade gold. I do trade silver. Okay, so we're good on oil, good on gold. Pound yen. Pound yen trading at 189. I've said this for the last 2 years. Be careful on the yen crosses. Don't be surprised if they're. I look at the yen this way. The pound yen, for whatever reason, you want to take a stab at it. Keep the trade size extremely small, but selling here, stop loss above. If you're right, coming back to the midpoint of this indecision, coming back to this channel low. Again, do we have risk off trading in any way, shape, or form this week and next week? Maybe. If we do, yen could get a little bit stronger. Dollar's certainly likely going to get stronger if we have risk off trading. BOJ is just quiet. If they keep their mouth shut, that policy that everyone's waiting for unraveling, it's probably not going to change. And I'll say this: you can mark this. February 19th. What Chris talked about in a session. I think that the BOJ at some point, it's going to be piggybacked off of an FOMC announcement. We're going to have an FOMC on a Wednesday. The BOJ is going to be a Thursday. and it's gonna be like big news in the FOMC, big news in the BOJ, and something wild and crazy happens. It's what happened back in March 2022. FOMC started to pivot into tightening like crazy, and what did the BOJ do? Did nothing. They weakened like crazy, and that was when the carry trade started. That was when the yen went from 117 to friggin' 152. It would be like that in the reverse if we have an unwinding of the carry trade. Right now, the carry trade is favoring higher interest rates, and it doesn't favor the yen. And so I'm very hesitant to say, like, this is a great technical setup on the pound yen. Why would I consider doing this trade? Well, if I traded it right here with a stop loss above, that is a tiny, tiny risk for any type of downside here, downside here. That reward to risk is crazy good. Doesn't mean you're going to win the trade, right? And that's what's so frustrating. It's a great setup. Take a stab at it. But I would say, you know what? Look, trade a micro lot. If I'm risking $50 and I can make 200 to 300, $300 on the downside, that risk reward is great. But I'm not comfortable knowing that, like, I can't take big risk on the end crosses. The confirmation's garbage. The carry trade is not unwinding yet. So it is very difficult to say JPY strength. It really is, or sustainably. That's my big difference is I just don't think the yen gets strong and holds that. Okay. Daniel, is that pound dollar? You just typed in JPY. Wait, did you mean G and J are kind of close together? Do you want dollar yen or you want pound dollar? US 100, Michael, is that the NAS? So you want the NQs? Oops. Okay. So you want if you're trading CFDs, yep, you trade the NAS 100. So similar to what I said on the QQQ, we're sitting here with this big melt up from, November, December. We have overbought conditions. If I go to the same symbol, NAS 100. Okay, right here. So the tech index, technically speaking, where are we at? We are at divergence with overbought conditions. Technically speaking, we have some demand to the downside, some pivots to the downside. Again, it could be choppy and volatile. I would just look at this, right? If we break that trend line, then there is some room to drop back down to pivot. It's just a little correction. If we're having downside movement, pound dollar, okay, I got that. If we go back into to the previous highs, we have two levels that I'm watching, and the more near term is this one, right? More near term is just look at left, find your all-time highs right in here. All-time high, this little window right there. If we have a pullback, and this is what you watch for on the tech stocks, if we break that trend line, okay, we break that trend line, there's room to correct back to all-time highs. That previous resistance becomes future support if the market's going to bounce. That's probably that 7 to 10% correction window. Let's verify that. Okay, 7 to 10%. Let's see. So current price 17,715. We pull back to previous resistance being all-time highs. That's around a 5% correction. Healthy correction, right? That's it. Healthy correction. Okay. So am I saying it's bearish? No, I'm saying that it has to break the structure first. So it's right here. You look at your chart, draw your trend line, keep an eye on price. Okay. If we didn't have this touch during October, November, if we didn't have the touch on the 200 EMA, I'd be much more inclined to think we're going to have a correction back to that. But that's a healthy dip off the 200 moving average. So now I look at those supportive ones. This is still support. This is still support. We could find a correction in here, finding support before we slingshot higher. But it's not that far away. If we go sideways and we get on the right-hand side of this trend line, I'd say that then you look at the horizontal highs and lows. We break below this. That's where the correction takes place. So we're not that far away from carving out a little bit of a top, looking for a bit of a correction. But with high volatility, this is what you have to be ready for. High volatility weeks like this week, if we had this nasty spill to the downside, we could turn right back around within 1 or 2 weeks and have this thing right back to the upside. So I'm still looking at the technicals to be, if we pull back to resistance levels, there's going to be interest in buying. If we have dips and pullbacks on individual stocks or indexes, the broader market, I think, is coming out of its shell and starting to get a little bit more bullish. Like I said at the very beginning of the session, the top 25 stocks of the S&P, top 25 of the NASDAQ, top 25 of the Russell 2000, all of those are outperforming the broader index. So it's a lot different than Mag 7. Now we're, top 25. But that at least is starting to show that companies that make money, that are getting higher concentration and better performance in the top 25, the higher echelon of their index. They're performing pretty well and as a whole outperforming. So that type of exposure to me makes a lot of sense for 2024. That's what I'm looking at here. Comment comes in, support resistance doesn't work on the NAS this week. I mean, it totally does. I just don't think you can look, if you want to trade support resistance, look at your CPI high and low. This is your support resistance right here, right? So this high, this low. That's the structure that I'm watching. That support resistance to me is what's going to matter. We go nowhere, we go somewhere, but that's the high low from CPI last week, right? We break down, okay, fine. It's going to take the sky is falling type narrative, and you're going to see it out there in the markets and the headlines. Like, it's going to seem like things are terrible. It's just a correction. I'm still overall bullish on the indexes. I think the markets are, getting past the fact that the U.S. recession is a threat. Yes, the Fed's going to start cutting rates, good, bad, and different. But we just have overvalued tech right now. Doesn't mean it can't go higher, right? John Maynard Keynes, one of the best quotes in the market. The markets can remain irrational longer than traders can remain solvent. Don't call the top, don't call the bottom. Don't fight the path of least resistance. So I think a healthy correction is fine. Technically speaking, it makes a lot of sense. But like I said, I'm not pricing things like I'm absolutely bearish. I'm not. I'm both directions. I just price out my trade. So if it goes up or down, I can make money. If it goes sideways, I can make money. That's my plan, right? So I'm just trying to carve out profits. Okay. So that's my just response to the support resistance. I mean, I look at the CPI levels intermediately high and low. We break above or below that, great. If not, you're just collecting more premiums on some range trading, but do expect high volatility this week. Okay, dollar, yen, euro, pound. Let's get to that, and then I'll start wrapping up the session here in a few minutes. So dollar, yen, euro, pound. I see dollar CAD as well. Okay, awesome. And nice to see some new followers here. Welcome, new followers. Okay, that's awesome. Let's go euro, pound, and dollar, yen. Euro pound 85.52. We took a buy trade in this in my trading room. We bought it at 85.50. So we bought it at 85.50. We bought it at 8,500, and we took the profit on this. We were up a net. We were up a net 45 pips because one was about break even, one was positive. So I took the profit here, and that was it. I still think on the bigger time frame, I like this as a range trade. So to me, this is just a big range on the euro pound. If we're buying here, the stop loss you can see is pretty tight, right around that weekly low. And if we head back into the middle of this range, that's getting around 86, 86.50. We head back up into these intermediate highs. You're talking about 87 to 87.50. So I like long euro pound. It's going to be one of the most boring trades you can take right now because it moves like 40 pips a day, maybe. But if you're buying the lows, stop loss is pretty tight, and then you're trading it back to the asymmetry upside. So I think euro pound looks pretty good as long as that stop is fairly tight, just below that weekly low. Gold for hacker there. We did gold. Okay, we did gold. I like gold watching the dollar index. There's a better chart, just a little bit. I have my analysis on it already. So gold, in my opinion, is this. If we don't take out the CPI candle from last week, that big day on Tuesday, if we don't take out that candle, I'm looking for dollar strength and gold to continue to push lower. If gold pushes lower, we're back below 2,000. We're revisiting the lows here at 1984. Is that the Orson Welles book? But anyway, I look at gold. If the dollar gets stronger this week, gold should be dipping back down to those lows from Wednesday last week. So right now, if I had an outlook, I would say I would look for, you go to a smaller time frame as well, I would look for gold to sell off. And the structure would be pretty simple. It'd be right here. If you just draw a trend line, if gold breaks below that trend line, I'd be short. Right? We came back into that pocket candle from CPI last week. We're not taking it out so far. So if the efficiency is filled, market satisfied, now we look at that supply selling back off and then head into these lows. If we get to the lows, there's profit there. We get below those lows into open space, gold can sell off, dollar gets stronger. Okay. All right. Then we do dollar CAD, yen, and dollar yen. Let's go dollar yen. Dollar yen, higher time frame. I'm not selling the dollar yen. Okay. I'm just not. Anything that I see on the dollar yen that's a dip, I'm looking to buy it. I think that the 152 levels are going to be in jeopardy. And when they blow through it, again, I don't know this. This isn't a crystal ball trade. Okay. But if I'm long dollar yen or I'm looking to get long dollar yen, here's one thing I do think. If we take out 152, 152 is probably going to open up another 200 to 300 pips to the upside. Why is that? Because that'd be a painful stop area to have the markets trigger. There's a lot of stop losses that are positioned on dollar short, fingers crossed and hoping that it never gets above 152 ever again. If it does, we're probably heading up to 155, 157 before we have a bigger turn, right? If you want to be a seller of the dollar yen, this structure needs to break. There's so much that can happen here where this could, go up here, pull back, go up here, pull back. I'm not selling the dollar yen until this trend line breaks or until we have something way more obvious up here with better confirmation. So right now I favor positive swap 5.5% to negative 0.1%. Take the carry trade. Looking to buy dips. Stay with your short-term alignments and buy trends only, and just focus on buying dips on dollar yen. That's my 2 cents right now. Or don't trade it. You don't have to trade it, but I think right now we're going to see more upside pressure until that dollar yen bursts through that 152 level and makes it a little bit more painful on the upside before the BOJ starts to step in and do something silly. Okay, dollar Swiss target. Dollar Swiss for me, target wise. In all truth, I'm holding for my portfolio for dollar Swiss to head up to 2 levels. Minimum would be this previous high around 92.50. That's my first target. If we get up to 92.50, that's a pattern that I would trade all freaking day, right there. Big pocket all the way back to 98 to 1.00. If we had a big bullish crown or bullish head and shoulders, love that trade on the dollar Swiss. Love it. So I'm long. I'm getting the positive swap. Let this thing just melt up, melt up, melt up. Let's go dollar Swiss. Don't be a turd. I want to go that level first, and then symmetry from there should get me up into this pocket. This is ultimately where I'm taking my full profit on the dollar Swiss longs. I'm holding this for a while. Okay, and then dollar CAD, one of the slippery trades from the last couple of years. Big range that I see on the dollar CAD. We're trading at 135. I'm still long on a swing. We bought it on this little dip, stop loss below, looking to see if this just heads up, 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 up. I'd like to see the dollar CAD get to 139, 140. If that is the case, I think that's a good spot also to look for a short. One thing I'd like to see correlate, I mean, if oil is going to head higher, that does make the dollar CAD slow down a little bit. If oil starts to get stronger, that will drag the dollar CAD lower. But again, look at the chart. I think you can see this pretty simply. If we come back to 132, from 132 to 130, I am buying dollar CAD. From 139 to 140, I'm selling dollar CAD. All this is going to be noise and chop. So it could be tough, but I'm currently long off these lows and trying to hold it. If it heads up higher, we get to 138, 139. It maybe isn't an oil trade. Maybe dollar CAD doesn't correlate with oil. Maybe it's more dollar strength CAD weakness. Maybe, right? So be careful on that one. If it's going to come to an open space, trade low, trade high. That to me is a better setup on dollar CAD. Okay, dollar yen, we just did that, Russ. And I'm going to let you go. See COT report, institutional heavy long on pound. We're going to plot that on my euro pound. So if they're heavy on euro pounds, okay. So if you're looking at pound positioning, euro pound positioning, then that trade would obviously go low, right? If it's heavy COT positioning on the pound crosses, then you're looking for the euro pound to head lower. So here's what I would say. Who's asking that question? Nobody's asking that question. So if we looked at trading pound long against the euro, I wouldn't do that trade right now. And why is that? Because if we hold this level, euro pound heads higher, why would I short it? You're essentially selling into support. That's not a good trade. But if we came up to this level, or we came up to this level, which is a long ways away for the euro pound, but that is where I look at positioning for pound strength. Now we can sell it at a high. Now we can follow along with that COT report. Now we can follow the smart money, the institutional money. But I want to sell it at a higher price. I'm looking at euro pound. If you wanted pound strength, I wouldn't trade euro pound. If you want a pound strength, look at pound dollar, look at pound yen, look at maybe the pound Aussie, pound New Zealand. In fact, those are two that I'm watching pretty closely. The pound Aussie, pound New Zealand, and I do have to go here in like just a couple minutes. And Chandler, I don't know if you need to take the session back over, but I'm going to wrap up here in like 1 or 2 minutes. Pound Aussie, this is what I am looking for. If we start to get some pullbacks into this 382, 50618 window, I'm looking for pound strength in there. So I still like the pound setup on pound Aussie for a swing trade. And then pound New Zealand, same thing. Pound New Zealand's made a healthy pullback. We're starting to get some fills here. 2046, 204.60. We have a pending buy. Stop loss below the swing. Waiting for the structure to play out. This is a low high. If this is a higher low, come on, pound. Give us that swing, right? So I like the technicals better on pound strength, looking for like a pound Aussie, pound New Zealand. To me, that's a little bit cleaner trade as far as the technicals. Euro pound, meh. I wouldn't trade that for pound strength. Okay. All right. I'm going to wrap it up there. I got another webinar at 11 o'clock. Okay, if you have any questions, let me know. Thanks for being here today. A1 Trading as always. Nick, Ivan, Frank, the team, Chandler, thanks for having me. And looking forward to be back. If you want to join me on the Discord channel, it's been posted in. Awesome. Check me out on YouTube, youtube.com/Chris Pulver. And we'll go from there. Happy trading, lots of profits. I'll see you all soon. Thanks.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.